Folks, Dan Frio here with your closing bell for February 26th, 2025. It is a wild ride that we're seeing right now. So my prediction earlier today was as if Nvidia stocks does well, we might see a big pullback in the markets because you might start seeing money moving back into equities. That's what we're going to talk about briefly. And then also tomorrow, the economic calendar for tomorrow might make some moves in the market. So between that and Nvidia, there's going to be some volatility. So let's get over to my thoughts on what's going to happen. So my name is Dan Frio. I hope to be your nationwide mortgage loan officer, where our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, stay all the way to the end of this video, and I'll explain to you exactly how we do that. So without further ado, let's get to these things. Well, mortgage rates are basically flat right now, but when you see the bond chart, you're going to say, Dan, shouldn't they have gone down? Well, I think a lot of investors are on the sidelines right now, or a lot of banks right now are on the sidelines saying, we're going to wait for the dust to settle because there's a lot of news coming. So right now, here's what happened in the stock market after the close. Nvidia came in and they just blew away the earnings. So my expectations are tomorrow we have a little bit of a pullback in bonds and a little bit of money flowing back into the equity markets. Today, it was kind of a flat market across the board. You have Dow Jones is down 180, basically everything else flat. The VIX is down a little bit at 19. We still need this to be about 12. Let's go and see how oil's faring, because that also gives us an idea what's going on with inflation. So it's flat there. Okay, so the Nvidia came in with robust earnings, so that might start moving money back into the equity markets. So now with tomorrow's news, which is right here, we got durable goods orders coming in GDP. That's coming in tomorrow, as well as initial jobless claims. And why is this such a big news day? Well, if you go over to the Federal Reserve, here's what the Federal Reserve monitors. And yes, the Federal Reserve is still in control of a lot of things, and we haven't heard much about them lately based on all the tariffs and everything else coming. But the Federal Reserve is back in the limelight, and here's what the data they're looking at. Okay, so here's what I want to explain to you. The data that's coming in right now is right in this wheelhouse. So here's what you're seeing right through here. The basically, what is this? The economy at a glance. So right now, this is telling us the federal funds rate, which is the rate the Federal Reserve controls, is 4.25 to 4.5. Okay, and I'll show you that. I think I have that pulled up to see what the CME FedWatch tool is going to tell us. But right now, this is where the federal funds rate is. Inflation, the PCE. Now, see that right through there? The PCE. These are the three big things that the Federal Reserve looks at. Okay, the PCE when it comes to inflation. That's the personal consumption expenditure, not the CPI or the PPI, which you and I follow quite a bit. But the PCE is what the Fed follows. So that's coming in tomorrow. Here's what's happened over the last few sessions. So if you go back here, let's look at September when the Federal Reserve cut rates. The PCE number was 2.1. And then they cut rates, and what happened? It went to 2.3, 2.4, 2.5, and now at 2.6. Is this going to continue to climb? Because if that does, the Federal Reserve is going to pull off all their rate cuts that might be coming. So that's one piece of the puzzle we're going to look at. The PCE unemployment rate. Okay, so we got some unemployment numbers coming in tomorrow. And then the GDP. So see these three? Let's go back to this calendar. We have the initial jobless claims, the GDP, and then on Friday, we have that PCE number coming in. So between NVIDIA earnings and this data, that's going to set the tone for the market. So NVIDIA earnings came in well. If GDP comes in pretty much in line, and as long as the jobless claims don't fall off a shelf, that'll be okay. And then PCE, if it continues to click up on Friday, I'm not quite sure what's going to happen at that point. I think all the rate stuff's going to be off the table, and rates are going to bump back up to the 10-year at about 4.3 to 4.35 if that's the case. So that's maybe about an 1/8% increase that we might be seeing if these numbers come in a little frothy. So again, we're going to go over here. This is what the economy at a glance looks like. Let's go to the bond market that we're seeing today, and we're looking at both again. The MBS market, because this is the bond that trades that tells us what's going on with rates. It was up 11 ticks today. So some banks repriced. A lot of banks didn't, especially over here. If you look at the rate sheets, they didn't reprice. So there's a lot of banks right now that are saying, okay, we're going to wait for the NVIDIA earnings to come out, and we're going to wait for some of the employment numbers and such coming out tomorrow morning before the bell, before we do anything with our rates. So I wouldn't be surprised. We're seeing right through here. I'm expecting if the PCE on Friday comes in a little bit hefty, you might see this yield on Friday go from 4.25 to 4.35. If all the numbers come in basically in line, you're going to see basically maybe just a little more reprieve in rates, and rates might come down a little bit. What my suggestions are, I'm not going into these numbers. Here's what I'm looking at right now. Here's a 5-day chart of what's happened. And again, as this chart goes up, rates are coming down. I'm in a locker at this stage. If this is a stock and I'm coming into earnings season, I don't know what's going to happen. I'm going to take some of my money off the table. And I think that's what's going to happen right through here in the bond market. So I think rates are at their low right now, unless, some of these numbers come in favorable. If they come in on point, we're also going to see this trend maybe continue. Any miss is going to be really bad news on the bad direction, and meaning rates are going up and the stock market coming down. So it's a coin flip at this point, folks. So I don't like going into this not feeling comfortable. So we're locking our clients in at this time. So I'll be back tomorrow to let you know how that all pans out, or Friday. Let's go to the CME Fed Watch tool. Now that's that thing we're going to look at. Here's right through here. The federal funds rate is right here. What this is telling us is, what is the probabilities of what the Federal Reserve is going to do over the next meetings all the way out through the end of next year? So in 20 days, the Federal Reserve is meeting once again. And here's where we are. There's a 95% chance the Federal Reserve is not going to do anything. How do I know? Well, let's just go over to this chart. You can probably see this much better. Okay, so you can see right through the top, the federal funds rate right through here is 4.25 to 4.5. You can see that right in that section there. Okay, now here's the probabilities in the meetings. Okay, so at the March meeting, there's a 95% probability that they're going to do nothing. They're going to keep rates right where they are. 72% chance in May, and then in June, that's when it starts to change. And so if they might be expecting 2 rate cuts, one in June or July and one in, I'm going to be on the side where I don't know, to be honest with you. And I hate to say it that way, but anything is just, it's basically a coin flip at this point, where it's that data dependent, where any miss, even by a tenth, can really elaborate all these numbers. So it's a hard market to digest right now. I'm just being honest with you, folks. So what do I do? How do I do things? And why is our quote, one application, one credit pool, and we're going to shop your loan over 30 different lenders? So here's what we do. But before we get there, I want to do a public service announcement. If you're in the process of trying to refinance or buy a house, or maybe even buy a car, before you do that, please go to optoutprescreener.com. This is going to stop the credit agencies from selling your financial data. It's kind of like the do not call list. So don't put it off. Subscribe to it today. There's no cost. It's free. You'll go into a database and your information will be halted. So please take care of that today. So now on to me, and what do I do? Well, I'm actually a federal licensed mortgage loan officer. I've been in the industry over 35 years. I'd love to win your business. Okay, here's what we do here. I work at a federally chartered bank. Okay, so that means I'm licensed everywhere in the country. But why I joined this bank is we're growing. And they brought me in as a part of the management team in a growing process to help them grow. So right now we have 30 other lenders that we're working with. So here's how it works. You put in your application at the rate update, or you give us a call. We put in your application. We get you approved. And then what we do is our big goal here is make sure you're approved, and especially approved in the right program. But now, how do we check rates and programs? Is there any down payment assistance programs out there? Is there any lenders with like perks going on right now? Well, that's what this process is all for. If you can find the best loan that possible, or you're just shopping, the rate is the number one important thing to you, I might not be your answer. My goal is to partner with people that really need help, basically from application to keys in your pocket. So that's what we do here. So I have 30 lenders on top of our bank that I can use their programs, their products, their down payment assistance programs that they have, it, everything else, and I can offer you their rates. So why do the shopping on your own? Let us do the heavy work. So that's what we do here. So go to the rateupdate.com. We'll find out more about me. You can do a couple different things. You can put in your application right there. Within 24 hours, I'll be giving you a call to answer any questions that you have. You can schedule a consultation right through there, or you can even go down through our website. And if you're a homeowner now, the cool thing is we put in a RateWatch calculator right there. So if you're looking to refinance at some point, just go into that and click it, and then put in your information. And when that rate hits that trigger point that you're looking to refinance, I'm going to get you on the phone, and we're going to get that done for you. But if you want to reach out to us personally and directly, just give us a call. You're going to move all the way in the front of the line. So give us a call at 775-5626. Or if you have any problems getting through, our phone systems are really terrible right now for some reason. So if you have any problems getting through, please just shoot me an email. Give me your question, whatever you need. Give me your contact information. I'd love to either email you back or I can personally call you. So please reach out to me. I would love to help. Thanks for watching, folks. Hope you learned something today. God bless. And if you haven't subscribed yet, please do so right over there. Take care. See you tomorrow.